Welcome back to Face, my friend. How are you?
Hey Dale, how are you, buddy?
Good, Nick. It's always great to talk to you. And there's a lot of debate right now, Nick. If you want to share your screen, maybe you could
Yep.
give us a few looks.
Yes, let me get it all set up here and just make sure this is the right one. I believe that looks good.
So I remember on our last interview, you said years that end in one were not usually positive years for the market.
No, they can finish positive, but there's gonna be a lot of volatility, and you could just go back and look at 2011. I mean, that's the last time we had a 1 year of a decade, and you could just see how volatile that year was. It took the
Okay.
Federal Reserve really till the end of the year, basically October, before the market started to make another advance into the end of the year. This time around, we kind of peaked out on right around the just before or I should say early September, right before the equinox.
Yeah,
So we're in turbulent times right now as we speak. Here's a chart of the S&P 500 if everybody could see, and
we
uh,
got it.
you could just see how the market has been really turbulent. So again, it lives to fight another day because when you look at a weekly chart of the S&P, it's not broken yet. The weekly chart is still intact. We're sitting above the 20-week moving average, or right on it, I should say, above the 50, 100, and the trend is very strong. But it's been really a choppy year this year. It has been.
Yeah, grinding uptrend, nothing really impulsive, the
No,
whole thing.
and we've seen a lot of bear markets in a lot of different places. The SPACs in particular, right? They were the
What
hottest things
there are
ever.
some people that are, getting bullish that were bearish, and we've gotten, the chart looks weaker to me, and they're turning bullish, and they're Ellioticians. Do you see any reason? And they have other methods. They were looking for a crash, and their work saying because of the action that we have right now, they flipped. Do you see any reason that if you were bearish from near the highs to flip yet?
Yes, I do. And it's very important to take notice why. I like to look at all different time frames. And one thing, like I just brought up that weekly chart, and you'll notice that we're still holding trend. And the markets had a dramatic fall, but realistically, this is only 5% or so, 6%.
Yeah, yeah.
And then we're still we haven't taken out any prior levels. You have to take out one prior level before you'll go down and test another. And the markets were defended obviously on Friday, and here we are today. I mean, I can put up the futures. You can give us a little bit of a better perspective. But here we are today, and futures are a little bit lower, a little bit weaker. We seem to continue to climb the wall of worry. But I think you still got to be a little bit cautious going into October, November. And then December, I know historically is usually a good month for the markets, but we have a big astro event going on right around the winter solstice, and also around there you have a lot of astro going on. You have a big Saturn aspect going on there as well. So I think
Maybe
now
we rally into the end of the year.
that's exactly what I was going to say. We could rally into that, but I got to tell you, after that, I would be very cautious in 2022. I didn't think this market would hold up as well as it did in 2021, especially. I was very bearish, Dale, and I even said it on your program going into March. And ironically, that's when the Archegos hedge fund blew up and the market rallied. So the day after that, we got news of that Archegos Capital hedge fund blowing up. They were highly levered, I believe 10 or 20 to 1. That's when the market rallied. So it just tells me the central bankers threw a ton of liquidity into the system, and that's really probably the story.
Yeah. Okay. All right. And is it hard to have conviction on anything? Like where are you at on the dollar? The dollar looked like it had a breakout over 93.5, and now
Yeah.
we're pulling back into the zone.
Yeah, so I'm going to pull up a continuous dollar chart. But remember, I talked about it right on your program. I said I'm not bearish the dollar. I'm actually bullish the
Right.
dollar, and I made some good money on the dollar trade. I missed this last one. I just didn't get involved. I just said, you know what, I'm going to sit this one out. Now I think the dollar at the moment is a little top heavy, so we'll probably do some more backing and filling. But pattern pending, we could see the dollar get to 98 eventually, and I think that'll happen more towards the latter part of the year or even into next year. But I am still constructively bullish on the dollar. Near term, I think we need a little bit of a breather, a little bit of a pullback.
Okay, anything within the dollar that you favor specifically, or you just mainly,
Well,
you
the
see anything
euro,
like
the
with
euro is
yields? Go ahead.
no. Well, we could get to yields in a moment, but I always
Okay.
think, whenever I look at the dollar index, the euro is the most heavily weighted against it. Then you have
Right.
obviously the British pound, Japanese yen. Overall, I think the euro now puts itself in a little bit of a pickle. I think that could get down to around 109 ultimately. But in the short run, I think it's due for a short term uptick right here for probably a couple of weeks.
Okay. All right, buddy. So you want to talk yields? Are you agnostic? And do you believe in the yield US dollar yen correlation?
Well, there's some correlation there, but all correlations fall apart. But my
They
my
do.
theory my theory on yields are that we are ultimately going a lot higher, and the market is going to force the Fed's hand, and the Fed ultimately will have to taper. But right now, when I look at bond yields, I'm not so sure that this last move is the move up to around 250 on the 10-year U.S. Treasury note. What I think we'll probably do is a lot more backing and filling here, and then we'll see this thing really rocket ship up. When I look at, say, a weekly chart, ultimately we probably got to get to around 240 to 260 before yields will really stall out. At the moment, I just don't know if this is the pattern yet to do it. I'd love to see one more little double bottom low, or maybe even a low into around 110, 107. And then I think yields just take off to the upside. At least that's the pattern structure I've been looking for. And I've been waiting. It's been a long go for these bond yields to really make a move. But they did bottom out right here in March 2020, and they're making higher lows on the chart. And that's really all we need to know. Eventually, they're going to, see themselves, the 10-year will see themselves above 2.25 to 250.
Yeah, okay, I'm with you. So right now you're agnostic.
Yeah, I think we'll do a little bit of
See,
backing and filling.
it's kind of, it feels like we're that way in the market on almost everything we've talked about right here.
Yeah,
I mean, it's like, certain moves were overdone and now there's going to be backing and filling. The dollar had a nice rally. Now it's going to, pull
back
back
and
for a
fill,
while,
sure.
but
Yep.
ultimately higher. So what do? Do you just, when you have opportunities, trade your bias and put a piece on here and a
Yeah.
piece on there, or wait
Yes.
for the signal?
No, right now I think you could trade around markets. Particularly in stocks. Certain stocks are getting hammered. Others are doing well. You got a lot less stocks now that are doing better. A lot more weaker equities. But if you can find really good institutional support levels on bigger time frames, those are your trades. And that's all it is right now. It's just short-term trading. Swing trade style stuff. It's very hard to get any conviction type trade for longer term holds.
How about the gold after its recent flash crash a few months ago, and then last week we put in low at 1720 level?
Mhm.
What do you
So,
think?
so when you look at gold, and I'm just going to throw up a daily chart here, we noticed a couple things. Gold got trashed in the June expiration, which was quad witch. It also got trashed recently in the September expiration, which was quad witch. So gold right now can chop around, but overall the trend is down. I think a move up to around 1870 is possible at best. Right now, I think the way gold is acting, you probably see a move into 1810, 1820. I just think it'll struggle there. Max upside would be around 1870. I don't see it going much higher than that overall. I think you'll put in another lower high, and gold can go lower. I own bullion. I own gold and silver bullion. I have since 2003. Have never sold a single ounce. But right now, the chart, that's what the chart's telling me. And that's all I go by.
And energy has been a star this year.
Energy has been a star this year, and I did not think that was going to be the case. I really thought the Biden administration, with all of their regulations, would have killed energy like the Obama administration killed coal. but the world depends on oil still, and that's just what it's telling us. And oil still looks strong on the charts. I did have a short on oil a while back. I got out I believe in July, and I never put it back on. And here we are now, around 76 a barrel, and I think oil still is holding up pretty well. I don't see a big downturn for oil right now.
Yeah. Any upside targets? Are you in the $100 camp?
I'm not in that camp yet. I think you get to 78, maybe 80. I think that's a fair possibility. I even think you're going to grind up there, though. I don't think it's going to be an easy move up there. Obviously, geopolitical events can always change that, but that's what I'm seeing on the charts right now. As far as energy stocks go, I always like to watch the XOP and the XLE. Both are the XOP has higher to go. Ultimately, it's going to be a grind as well, and the XLE I think can go higher up to around the low 60s, maybe 63, 64. But that's going to take a lot of time. It's not going to happen overnight.
Okay. Anything else on your mind, Nick?
Well, right now, I'd like to just say that this is a grinded out type year. Every time I see a gap up, I think the markets are going to fade. And when I see a gap down in the pre-market, I think they're going to rally. And I'm going to stick with that theory because it's been working fairly well. But ultimately, this is still going to be a choppy, sloppy, duke it out type year. I don't know exactly how this will all shake out until the patterns unfold a little bit more. But remember, there's lots of equities, whether it's semiconductors that I follow very, very closely, that still look pretty poor on the charts, although they did have a good Friday coming off of the lows. But, if you see these semiconductors break down, then I think you got to be really, really careful. Either way, I'm not a big fan of tech this year. I haven't been, and I think you got to still be very careful with technology going forward, even into the end of the year and especially next year.
Yeah, Nick, I follow some of the FANGs, and Facebook looks lousy, and Apple is, down about $18 from its high. And there are a lot of, of the mega cap techs that don't look that great.
Yeah. And if you think about it too, look at Microsoft. I mean, it had a great day on Friday, but look at the chart below the 50-day moving average. It broke below that September 20th pivot low. These are not really very good signs of strength. And I just think going forward, technology has had such a run. I just think that run is done, especially when yields go up. When yields go up, tech does really poor. So
you buy the banks, on weakness, and you sell any strength in the mega cap tech.
You could do that. Although the banks look a little heavy here, a little top heavy here as well. I'd probably look at more like the cyclical names. Just buy anything in the cyclical area. I think that has a decent chart, decent support. I think that will get you through. But this is that kind of year. It's a trader's market. I mean, I've all the years I've done this, the 1 year of the decade has always given me the most trouble. And it continues to be that way even this year.
Well, may you live to see another 1 year.
Thank you.
How about several?
Yes, you too, Dale.
How many do you want, man?
Well,
how many?
In this upside world, I'm not sure I'm going in for more than 2.
All right. Well, at least 20 years, and I hope you retire on an island for at least half of those.
I would love that, and that is actually.
You'd still trade, wouldn't you?
I would. I would always.
It's like being in the mafia, right, Nick?
Well, I guess it is. I don't know.
I didn't mean to touch on the sensitive subject. Right?
Once you're in, you can't get out, right? That's what they tell you.
Yeah, it's Hotel California. I've tried.
Hotel California, right?
You can check out, but you could never leave.
You can never leave.
And take it from me, guys. Everyone listening to my voice, I've tried I've tried a few times. So anyway, from one addict to another, Nick, it was great. From one action junkie to another, Nick, it was, thanks for your giving spirit and coming in here and sharing your views, because I know, what you have to go through to get good.
It's,
and it's still challenging.
That's right. But believe it or not, it's the challenging parts that make you better. It's the challenging times that will make you a
Yeah,
better trader. And I try to tell that to a lot of young traders when they lose on trades, because these young traders that have come in recently, Robinhood traders or eToro
yeah.
traders, they only know a bull market, and bull markets make everybody look smart. So I always
Yeah.
tell them, I said, listen, when you get through a bear or two, then come talk to me. I said, until then, I said, enjoy this bull, but it's full of bull. So
Well,
just,
it's more, it goes back even further than Robinhood.
oh yeah, yeah, it does.
I mean, I say a generation.
Oh, absolutely, absolutely,
What do you
it
think?
does. I agree 100%. I
Yeah,
just bring up the Robin Hood story because there's so many. I have a nephew that's 22 years old. He thinks the business is easy, and I
yeah.
said, "Listen, kid, this is this is anything but easy." I said, "I was in an
That's an
office.
oxymoron.
Yeah, I was in an
Trading is
office.
easy.
I was in an
Huh?
office with 1999 with 800 people. Everybody was making money hand over fist. Came
Yeah,
2000, that office shut down with 5 people. So,
yeah.
it just goes to show you how fast things can change. But the real challenge will come when the bear really arrives. And, I would be cautious. I don't know if we get the big bear. I think that's still some time off. But I think we're going to get some bears in here as we get towards the latter part of the year. And even right now, I think you still got to be careful. October
Yeah,
is
I
a
mean,
very
bears don't
ominous
go in,
time.
bears don't go into hibernation till the winter, till the solstice.
That's right. That's
Why
right.
can't that event be a major crash flow?
It could. It could. And this is the time where you have to just protect yourself. Don't
Because people
overload
couldn't
yourself.
find the right toys for their kids, and the kids, because of all the uh,
Supply
chain,
chain, yeah, disruption.
yeah, supply chain. So
Yeah.
they can't find, and so people are real agitated, and the market sells off.
Well, it certainly can happen, and I mean we've already seen a September dip, and a lot of people didn't think that was possible either. And then we have a lot of geopolitical events going on. I normally don't even care too much
All
about it.
right, I want to know what you think is going to happen with China. I mean, are things going? Is there going to be an accident with the way they're flying over Taiwan invasively?
I think it's inevitable that they're going to go and invade Taiwan, but they have other issues too. They have a
Oh
Three
yeah.
Gorges Dam that is on the brink of potential collapse, and they're going to have to deal with some major astro events coming up. So they're going to have to be
What
careful
about
there.
the draconian things they've done as far as reverting back, and persecuting guys like Jack Ma? Yeah, do you know
It's
where he
terrible.
is?
Sure. Oh, no,
Uh,
nobody knows where he is. I mean,
yeah.
when's the last time
So
anybody's seen Jack Ma?
so and deciding to deleverage and try and manage, um, you know, a broken real estate market.
Yeah.
And
Well,
I mean, what do and maybe they want to export a credit crisis to the world.
Well, they are. I mean, they're probably not going to export a credit crisis right now, just because things are probably more China. They don't let other entities or other big banks really go in there, so that might
Yeah,
be the saving grace for the moment. But overall, I mean, when you think about what is
they're
going on there, is
they're a
it,
third of the world GDP.
they are a third of the world's GDP, and they're potentially going to get bigger as well.
Yeah,
So I mean, we're just looking at a country that just calls the shots. Look at the Chinese ADRs in the U.S. I mean, look at Alibaba. This is the Amazon of China, which has 1.5 billion people, and just look at that's the wrong ticker, but look at this. Look at the stock. I mean,
wow.
this is a horrible showing. I mean, you can't make this stuff. Watch this. I mean, when a stock takes out its monthly chart 618, I mean that's not a good sign. But this is all from Chinese rhetoric. I mean, it's not
Right.
that the company's a bad company. It's not that they don't have they don't make money. It's just Chinese rhetoric, right? All of the Chinese ADRs doesn't really matter which one we look at. They're all terrible. Look what they did to the Chinese education companies. Now, some of them may have been scams, and in all fairness, a lot of these Chinese companies are frauds. But I don't think a company like Alibaba is a fraud, and I don't think Jack Ma is a fraud. I think he's an actual person with some intelligence that built something.
How
Uh,
about credit spreads? I heard they really blew out. with
Yeah,
what was happening with Evergrande.
but can we really get a real read on any of that stuff? You know, they're probably a lot worse than we even know about. I mean, but we can't really get any truth out of there. You can't get any real read out of there. There's nobody allowed to investigate it. I mean, even in the U.S., we barely have a media now. We're not allowed to investigate anything, right? So, you know, we're seeing this shift happening, and they're leading the charge.
Nick, see, I didn't even know we were going to talk about this.
Me
So,
neither.
you know, it's great. It's great just to jam with you.
Yes, it always
in the
is.
markets, you know.
It always
So
is.
so I appreciate your time this morning, and you know, wish you a great fall trading season, you and all the people you work with, Gareth, everyone, and appreciate you, my trading warrior brother, Nick
Thank you, Dale.
Santiago.
Appreciate it a million. God bless you, and you do a great service to everybody.
You do too, Nick, and you can find Nick at ITMS, and you know, the Gareth Soloway's with him. They have some great analysts there to check out. Thank you, Nick, so much for you know, just bantering, and it's fun when two pros get together and talk about the markets, right?
Oh, it's great. I absolutely love it, and thank you so much for having me. Always.
We'll
Thank you.
break bread. We'll break bread and raise a glass someday. What do you think?
Let's do that soon. Let's do that
All
soon.
right. All right, Nick. Adios.
Dale, take care, buddy. Thank you.
All right. So that's it, everyone. Hope you enjoyed it. Nick's a pretty cool guy. He knows what's going on. Follow him at ITMS, and in 20 minutes, the best team on the net is going to be collaborating to get you guys straight about the day and the week on the morning edge. And I know you guys feel like joining. Those of you that are still here, go ahead and take Blake and the team up on their discounts and invest in yourself. Okay. Because I'll just tell you one thing, because I've seen hundreds of traders, just like I've interviewed hundreds of traders, and you either pay to learn or pay the market. And I'm hoping if you choose the latter, it's a community college tuition that maybe the Democrats could make free, but it's usually not free. So that's it. Don't just count your memberships, count your blessings. See you, Laura, Anthony, Monica, Sinatra. I'll see you guys. Have a good day. Seize the day. Carpe diem. Adios.